Alrighty, let's go ahead and get started. Welcome everyone to this week's TradeFinder Live. Great to be back with you all during this trading day and during trading hours. My name is Zach. Most of you are likely familiar with me by now, but if you're new or joining us for the first time, welcome. It's great to have you with us. First and foremost, we do have to cover our disclosure disclaimer agreement. The main thing to take away from this is that we are not licensed investment advisors in the United States, so nothing is to be taken as personal investment advice. Feel free to take a screenshot of that if you like. But other than that, let's get right into the topics of today's session. The market's on pause as it continues to look towards the inflation data that's due out this week. Crypto seemed to be down again. So again, without further ado, Mr. Rob Roy, let's get into some topics for this session.
Hey, Zach. Hey, everyone. Welcome to this week's Trade Finder Live. Apologize for the couple minute delay there. Appreciate your patience. Technical issues. Technology is great when it works. Go ahead and turn my camera on here so you can see me. Freezing to death in the mountains. And we'll bring over the screen. Hopefully everybody's seeing the screen now. And take a look at where we are in the market. As Zach mentioned, we're pausing just a little bit here, which is exactly what we should be doing. We were in the upper end of this ascending pennant pattern. Lots of you asking in the U.S. market update. Hopefully, if you haven't looked at the U.S. market update, you'll go do it about the possibility of this still being an ending diagonal and also issues about the wave four. Both very good questions. So when we take a look at this, we are continuing in this consolidating upward pennant pattern, which is exactly what the formation of an ending diagonal is. We did have a wave five that relabeled to a three. That's one of the requirements, is that you're in a wave five when you're in an ending diagonal, which makes sense. You should be ending a five wave pattern. And this is just a particular pattern that shows the ending of it with lots of zigzags, which I've shown you in the past. So at the upper end of this upper trend line, we've moved back down. We're down around the 10-day moving average, kind of getting into the midpoint of this ascending pennant pattern. The only question in my mind is which comes first? Do we continue up in the wave three, hit this 100% extension, and then have a wave four correction as we start the new year, and then perhaps move into the wave five extension to the upside? Or do we have a little correction first and then rally towards the end of the year? If we're going to have a correction first into the wave four, it should be starting rather soon. Expect within the next couple of days. In other words, perhaps this movement down is more than just movement into the middle of the diagonal, and then we continue lower to create the wave four. I tend to think that with this time of the year where we normally have the melt up scenario, that it's likely the wave three continues. And then once the inauguration comes in, we get to January, we get a bit of a correction. I was sharing with our subscribers at Evo Trader Live yesterday from evotrader.com. What normally happens this time of the year is those investment managers that have already met their benchmark, which is beating the S&P, have done so already. They don't trade now. They don't want to risk going backwards. They've earned their bonuses because their bonuses are paid by outperforming the S&P. And so that's part of the reason why we have lower volume this time of the year. Well, if the market does continue up, well, they've been out of the market, and it almost feels like they want to recover what happened while they were gone. So it's almost uncanny how when we do have a year, and it doesn't happen every year, we've had some markets where we've had corrective moves. With the low volume can come higher volatility. Doesn't have to be low volatility. We had a few years ago, the market actually bottomed on Christmas Eve, which is the exact opposite of how things normally work this time of the year. But what ends up happening is if you have the melt up towards the end of the year, when you go into January, you get a corrective mode at the beginning of January, and it corrects almost exactly the amount of the drift up between the period of time from Black Friday into the Christmas holiday, and then the Santa Claus rally week between Christmas and New Year's. So really interesting how that works. So that's the only question in my mind. Likelihood is very high that we continue higher. It's just how far do we go first before the correction in the wave four, and when does that occur? Before or after the new year? If we take a look at the bond market right now. We are looking towards the CPI report comes out tomorrow, and the PPI report comes out on Thursday. The market is kind of a bit on pause today, waiting for those two reports. Likely that those are going to be the deciding factor on whether or not the Fed cuts the 25 basis points in December. I think there's a lean towards the fact that they are going to cut, but based on what some of the Fed governors have been saying in their interviews, et cetera, it's not a guarantee. There are some that are not sure about whether or not they should cut in December. I do think that if they don't cut, that could be a little bit of a disappointment in the market. Perhaps we start the wave four then. If they do cut, then I think it's status quo. We likely continue the melt up scenario into the end of the year, and then perhaps the wave four correction comes after the beginning of the year. You can see here that we are moving down in prices. So we had a bit of a rally in prices. We've started to come back down. We broke below the 50-day moving average today, which surprised me a little bit. I thought that might hold. This zigzag was very classic LA wave zigzag pattern. You have a B wave at the 38.2% level. You extend to 61.8. If you continue lower, you extend down to the next fib level, which is 100%, which we did. And when that zigzag completes, the normal course of action is you retrace the C wave. So you move back to the B. So I feel like that there's a high likelihood we're going to come back up here to this B wave. So we came down. We got a little bit away from the 10-day moving average, back and touched it, all normal. And then I thought perhaps we might get a little bit of a bounce today in prices. Again, this is on TLT, the 20-year. The chart is prices and yields move inversely. But we're down again in prices, which means that yields are ticking up a little bit, which with this move to the upside here, you would have thought the bond market was feeling pretty confident about the Fed cutting on the December meeting. Is this telling us that maybe the bond market isn't so confident in the Fed cutting at the December meeting? We'll see how far down we go, but the fact that we broke the 10-day moving average today, I think, is interesting. And how far much lower do we go? Do we have a follow-through day below that 10-day moving average, or do we hang around in here? There is some congestion in pricing from back in the end of October, early November. So we could come down here and find a little bit of support there. But just today was interesting in how the bonds are reacting. Maybe that's normal in front of the CPI report tomorrow, which is going to be so heavily watched. If we look at the VIX, we are getting a little bit of a tick up in the VIX here. We came down to that 12.5 level that we've been talking about, and we've bounced off a little bit, trading at 1411 right now. I do feel like there's a high likelihood that we stay in this channeling range here, barring the Fed surprising the market by not cutting. That could change everything from a volatility standpoint and on the VIX. But as long as things go as planned, the Fed does cut, et cetera, I think we're just going to kind of meander around in this trading range between 12.5 and 15 through the end of the year. That would tie in with the melt up scenario in the market. But maybe that happens, maybe it doesn't. We'll just have to wait and see how that all plays out. Looking at some of our other markets, we look at the Dow, a little bit of a pullback. I've noted that although we are in that ascending pennant pattern on the S&P, which does coincide with an ending diagonal, we are not in the Dow. We're just in a plain old basic trend channel to the upside, as old school technical analysis as you can get. And we're right in the middle of it. And the expectation would be for that C wave on the zigzag to extend up to 460. And when does that happen? Do we come back down towards the lower part of the trend line? Do we turn and move back up? Again, part of the melt up scenario would tie in with moving up to that 460 level earlier. Maybe we get an unexpected CPI print report tomorrow, and that makes the Fed's decision for them. And that could create a corrective wave. So tomorrow's a key day. If we are going to see any sort of a correction prior to the end of the year, I think it could be tomorrow with the CPI, or the Fed meeting on whether or not they cut rates or not. Looking at the Qs, kind of going sideways a bit here. You would expect that with rates ticking up, that would kind of slow this movement down. But on the other side of the coin, we were a little bit away from the 10-day moving average. We'd gone a little vertical. The Qs needed to rest anyway, so this is a good excuse for it. With rates ticking up just a little bit, it is good for the Qs to take a little bit of a break. If we do continue with the melt up scenario, the target for the Qs is up around 550. That's a second um, uh, extension. Just as a reminder, the B wave went right to the 61.8% level, which yields 100% extension. Then if you get a further extension in the C wave, you go to the next fib level, which is 161.8, and that would be right there at that 550 level. But we do need rates to cooperate here, I think. If we do have the Fed come out and not cut, that could be challenging for the Qs to continue that move up. But so far, so good, even in the midst of what's going on with the bond market currently. The IWM pulling back a little bit as well, and that's to be expected. I mentioned this yesterday to our subscribers as well. When you're moving down like this in the IWM, that was a little odd. As we were moving up in prices and down in yields, a lot of people equate the small caps as being very rate sensitive. I'm one of those. And so when rates are moving lower, you expect there to be a bid. Well, we did get a pretty vertical move and we got away from the 10-day moving average. So we came back down on the IWM back to the 10-day moving average, which is what normally happens. Correct a little bit of that vertical move, which is also what normally happens. That's why you hear me saying all those rules all the time. And then the only thing that was odd was the fact that it was doing this, correcting back down in a period of time when rates were moving lower. So that's when you would have thought they would have had a continuing bid, but it shows the power of things don't go vertically for too long. You can go vertical for a little while. You can get overbought for a short period of time, but it's always a short period of time. It doesn't last forever. There's always going to be some sort of a corrective move back down. And this occurred even in a time where you thought that was the most conducive for it to continue its upward move. All right, let's take a look at the metals. We'd had a little bit of a bid in gold yesterday. So we wanted to see how that played out, and it is continuing in today's trade. You can see the bar here. Let me spread this open so you can see today's bar. There you go. So we had a little bit of a breakout today, and we were saying that we need to see, do we get a follow through today? And we are. So we're getting a follow through in the breakout in gold. Let's look at SLV. And that was right at a very strong wave 4 level, right at the 61.8, my favorite fib level. Also getting follow through, not quite to the degree that we are on GLD, which gapped up again today, but a nice follow through nonetheless on SLV. So really think there's a good chance that the metals can catch a bid. A little surprised that we're moving. I had mentioned I really felt like the metals would stay in a trading range until we got into the new administration and found out if we are going to see the kind of tariffs that President-elect Trump has been talking about. There's a concern about importing inflation if he goes as strong as he has, but the equities market has been viewing that as just threats and that he's using the threat of tariffs to get what he wants in other areas. And so far, just some of the job owning has been helpful in some of the things that he's wanted to achieve, and he's not even in office yet. But I thought maybe the metals would just stay in a trading range, and they still could. Perhaps we're just moving into the upper end of the trading range, and then we turn and head back down until we find out are those tariffs going to be enacted, and how severe are they going to be, and what is the likelihood that that could import some inflation. Without those, if the tariffs aren't going to be as strong as feared, then yes, I think that we see a renewed bid in the metals, but we might be jumping the gun here a little bit. We might be starting a little bit sooner than I expected, but we're not out of the trading range yet. So I would expect between this uh, level here just above 250 where the consolidation was would be the upper end on GLD right through there. And then down here around the 235 area, around where the A wave impulse ended, that would be the trading range that I would look for. So we are breaking out of this triangle, but we haven't quite broken out of the trading range, but we're getting close. We're getting into that area, so we're going to have to keep an eye on that because there could be a really nice directional trade there in the metals if we do continue these movements. So pretty interesting action there. Zach mentioned that there was some activity in the crypto world, so we can take a look. We're getting a little bit of a pullback on Bitcoin right now, and the question is, was that attempt to break above 100,000 just a head fake? You can see we tried it 4 days in a row, and then we've broken below 95,000 currently at this moment. So we're down a bit on Bitcoin right now, and we'll see if that continues lower or if we turn and head back to the upside. This is an area where we need to hold on Bitcoin right through there. So just we have a little room. We could go a little bit lower there. And I'm not using that 30-day moving average. That's the fuchsia colored line. The lime green line is the 10-day, and the blue line is the 50-day moving average. So the 30-day I keep on there for showing crosses between the 10 and 30-day moving averages, not for the 30-day being a support level. But it just happens that the consolidation is right around where the 30-day is. So it'd be like about 92,000. We could drift down there, but that's the area we need to hold, right in the 90 to 92,000 corridor there. Because if we break that, then we have a significant move lower in Bitcoin. We could be coming all the way back down and retrace the post-election rally. That's a possibility if we break below 90,000. So we do have that little corridor between 90 and 92,000 that we're going to want to keep an eye on. And, you know, going through this backing and filling is not unusual. All the cryptos had a pretty amazing run following the election results, and backing and filling consolidation is quite normal. Looking at Ethereum, it's pulling back down towards the 3,500 level, which is right where the A wave impulse ended. That's an area where it needs to hold. It also happened to be just by coincidence coinciding with the 30-day moving average, but it's more where this A wave impulse ended that it needs to hold. If not, then that means we're likely going to retrace the entire C wave. And you can see that we went right up and hit that 100% extension, which with a 38.2% B wave correction was the extended level. 61.8 was the target. 100% was the extended level. We went there, and you would have to be concerned with this move down on retracing the C wave. As I mentioned earlier, that's what happens when a zigzag ends. You retrace the C wave. So we could be coming back down here towards 3,000 on Ethereum, and see that move continue to the downside if we are going to get kind of a break. In addition, we had that symmetrical triangle. You should know the triangle rules by now. When you break out of a symmetrical triangle, at some point you're going to come back and test that point of the breakout. We don't know when. Works the same way as gaps. Sometimes it happens rather quickly. Sometimes it takes a while. But usually you come back and test the point of the breakout, which is right at 3,000. So maybe we come back down there, even if it's for a short period of time on Ethereum. So yeah, keeping an eye on a little bit of this backing and filling consolidation that's going on in the crypto space. We'll look at a couple of the ones that we added in with ADA movement back down here under $1 now, down to 93 cents. Right here around the 90-cent area is where it needs to hold. So right through here, boom, that area would be a good level to hold. Again, also coincidentally, right where the 30-day moving average is. There is a possibility, though, that doesn't hold, and we come down and we do have some congestion right through this area, but that's down around 75 cents. So we consolidated there at 60. We moved up. We consolidated again around 75, and then we took off and went all the way to $1.30. Now we're back down. So we want to see if we can hold in this area here. It seems a little tenuous, little bit of support there with that low from towards the end of November. But down here around 70, 75 cents seems to be a bit more support if we were to head down there. And then XRP that had some positive regulatory news, also pulling back a bit, down below $2, down to $1.99. And this one's kind of in a little bit of no man's land. It seems like the next major point of support there is going to be down around $1.50. So perhaps we come back down to $1.50 there on XRP and wait and see if that holds, which amazingly would be about half of where it reached at $3 just a week ago. Amazing how fast things can change in crypto land. They are nothing if not volatile, that's for sure. So if you enjoy that, a lot of fun there. Let's look at the dollar real quick. Obviously, the dollar could very well change with the economic data that comes out this week with the CPI and PPI. Right now, I think the dollar is acting pretty well. The concern is that we have a wave 4 labeled here that is purple, meaning that the algorithm thinks that that wave 4 is likely done. I don't really want to see the dollar take off and move back to the upside. It's very difficult for companies with international exposure due to the exchange rate, et cetera. But if the Fed does surprise and doesn't cut at the December meeting, if they pause, certainly could put a bid back under the dollar. That could be what spearheads that move into the upside. And then again, the same thing with rates. So a lot, even though we're at a time of the year where things are usually pretty quiet, we do have some things to watch with the CPI, PPI reports, and the Fed meeting. All right, I'm not going to do the international markets today because of the fact that I didn't allow time for the Q&A last week. So I wanted to give some extended time for the Q&A this week. Real quickly, before we get there, I wanted to show you our case studies. So we have XRT, which we did 2 weeks ago, hanging in there really well, ticking up today. So making a bit of a movement to the upside today. So far, so good there. We had it going to 86, so it's at 84.37, little further to go, but nice movement to the upside today on that. So patience rewarded there. And then last week, we had another great one, just like we did with the MARA trade a few weeks ago. We had another real quick, nice big move. Some of you made comments about it on the U.S. market update. Thanks for that. Hopefully you'll tell your friends about TradeFinder, et cetera. When we have been hitting some home runs here lately. So that nice vertical move very quickly got actually even above the target price that we were looking for. Note what's happened here in the Amazon chart where I drew that line. This is part of the reason that I draw the lines, is that was the lower end of the wave 5 tap box. And that's gone away. The pattern has relabeled. And now we have Amazon in a wave 3. So it was a 5. It's relabeled to a 3, which means Amazon could have some significantly higher highs, but it's overbought right now. Too far away from the 10-day moving average, too vertical in the move. Let's let Amazon go through a little bit of backing and filling and consolidation, and then it might be an opportunity to get back in and do it again on Amazon. But don't feel, even with the relabeling, bad about. And we hit our target. When you hit your price targets, you take your gain and be happy. If you could have had a different price target, okay, but learn from that and move forward. But don't ever second guess taking off a trade that satisfies the trading plan that you built when you entered the trade. That's how you can get yourself in trouble. So we hit our target, we took it off, we exited it in the TradeFinder posting on this platform, and the social media aspect of it is one of the things that I like most about it. I'll have Zach come in. I'll give you what our case study consideration is going to be here at the end and for this week, and let Zach show you how to post an idea on the platform. Everybody can utilize the social media aspect of it. I think it's fantastic, and it's going to really go after taking a dent in Reddit, etc., on the things that this social media platform has that they don't. So with that, Zach, let's go ahead and take some questions, and from there, then we'll have you back at the end to post this week's trade idea.
Yeah, sounds great, Rob. Let's go ahead and start out with Tesla for Will.
Good old Tesla. Obviously, there is a lot of positivity behind Tesla with the fact that Elon and Trump are kind of best buddies now. And it's highly likely that whatever kind of legislation Elon wants to get, he's likely going to get. That's how the market is viewing it. And so the comment that I had made before was that with this area here in the C wave extension, with a 38.2% B wave correction, we were going to go to the 61.8% extension, which would take us to roughly 375. And if we're going to get to 375, would we really stop there and not go to 400? The big round numbers. You all even referenced in the U.S. market update my comments about the tractor beam effect. And I use that as an analogy, just kind of as a nod to my dad that used to watch Star Trek daily. It seemed like it was always on the TV. And when I was growing up, and those big round numbers just act that way. They just draw stocks to it. And people were asking, well, why is that? Why does it work that way? It's a psychology thing, the trading psychology. The big round numbers are also where some of the program traders, we know a lot of trading is programmed, will place their buy and sell orders, stops, etc., around those big round numbers. And then you also have the aspect of the options, open interest around the big round numbers as well. A lot of people like to pick those when they're choosing options. I think you should pick your strike off the delta, but a lot of people do use the big round numbers. They don't like having the strike prices on some of the weird numbers in between. So when you couple all those things together, yeah, it's just like a magnet drawing the stock to it. So we're over 400 now. So I thought, all right, well, if we go to 375, we probably don't stop without hitting 400. Well, now you can see right now we're at 407, 80 plus, and still ticking up at the moment. So the likelihood is that we head up now to this 100% extension. So that would be the further extended C wave. 61.8 was the target. We hit it. We're continuing higher. Let's take a look at the ADX real quick with a DMI, and that looks pretty darn strong. So I do think the likelihood is now that we complete this C wave as an extended C wave. We're getting a little vertical here, so if it doesn't do it immediately, maybe it pulls back a little bit and then goes up there, or maybe we just continue up to that level. It's not that far away before we do some correction, but it does seem like 425 is the new target on Tesla.
Thanks, Rob. Next up, we're going to go over to Roblox RBLX for Trade Simple.
I haven't looked at that one in a while. That one was asked about pretty often. At one point, made a nice move. Again, one of the odd wave fours, right around 30%, just barely in the area that if Elliott were here, he'd say that he would consider that an actual corrective move. But he does label it in the algorithm due to the fact that it's past the 23.6% fib level, and he was such a believer in those fib levels. Now the wave five is going up. You would think you would make it to the 61.8% level, but it doesn't have to because it didn't quite make it all the way to 38.2 on the wave four correction. So this could stop any time. And notice there's the round number again. They went right to 60 and then we backed off, and then we're trading at 56.03 at the moment, but we are still above the 10-day moving average. I think if you're long, roadblocks. You can stay long as you stay above this area right here at 55. So that's the top of the wave three. That's where the 10-day moving average is, and that would be the likely level of support. If we break that and you're long, I think that's your stop because the likelihood is that the wave five is over and we're coming all the way back to the previous wave four, which would bring you just under 50. So I don't know if you'd want to withstand that if you're already long. If you're looking for an entry, I would see if we don't turn and bounce off of this level here at 55, where the 10-day moving average is. So if you're not in yet, I would wait and see if we bounce. If you're in, I don't see a reason to get out yet unless we break below 55, and then I think that's your stop.
Very well. Next up, we're going to go over to a couple symbols from Jeff. First one's going to be PLTR.
Oh, yeah. Not surprising. Seems like everybody is interested in that stock now. They were for a while, and then it kind of went away, and now everybody's back. Want to know what's going on with PLTR again. So they must have changed. Apparently, they've moved over on to a different exchange. That's why you would have this looking like this without any further data. So Palantir has apparently moved. I'd have to take a look and see which one they're on now. So I'm not going to be able to give you too much information here. But so when you see this kind of thing, you're like, well, where's the other data? Palantir's been trading forever. When you see this kind of thing, it means that they've moved their company to a different trading exchange. And we can find the symbol from the previous exchange, but you're only going to get the data moving forward from the new exchange because that's the only data that they're going to send you out from when they were trading there. So, yeah, a little bit difficult without going through and changing the exchanges, et cetera. And we can do that. We'll do that next week and see where we are. But for now, I think that we're consolidating a pretty good run, and I think we need to allow that to continue a bit sideways. But I don't think Palantir's done. I think Palantir, after it consolidates this big move that it has, turns and runs back up, and I wouldn't be surprised to see it move up to 100, and that could happen in a short period of time. But the consolidation that's occurred yesterday and today is normal. You can see where it opened yesterday and then traded down considerably, but holding above 70 there is key. So
Thanks,
that's
Rob.
what's going on with Palantir.
Second symbol from Jeff's going to be MARA.
Yeah, Mara that we looked at before, and I would imagine with cryptos pulling back just a bit at the moment that it would be down, and it is a little bit down here around 23. So the question on whether or not we come down to the 50-day moving average, I think, is key here. You can see this was an AI score on our platform with the hub organization and what we utilize for sending out those impulse AI strategy alerts at evotrader.com. Interesting thing here, it was a low score. You can see it's actually red at 18. We like to look for things 75 or above. So if this would have been a 75% score, it would have been telling you that there's a high likelihood you continue up and hit this target price. The fact that it's a low score, the data scientists that have created the AI tell us that if you see a low score, you can fade it, go the opposite way, meaning it's likely to come down and hit the fail zone. Well, look what happened today. It's exactly what happened. So the AI signals that this software platform, and if you haven't gone and gotten it, go to hub.com, hubb.com, and get a copy of it. Comes with free LA Wave, free live LA Wave, intraday LA Wave. There is a premium if you want the AI signals, but gosh, it's worth it if you've been following along with us and seeing the signals that we've had. But this one, as far as when it came out, was an opportunity to fade back down and trade this one to the downside. So we had our big upward move that we did a couple of weeks ago, and then it shows up as an AI signal, and then the reversal occurs and it moves down. So does it hold at this area here? We're awfully close to the 50-day moving average. Perhaps we're going to come down in this area, test the 50-day around the 20 level, and then I think if it makes it down that far, I think that would be a very interesting place to try to look at this again. So while the cryptos are consolidating those big, huge post-election runs, this may come down just a little bit more, but I would be extremely interested in it at 20. If you're looking for another entry, I would wait and see until we get back above this 10-day moving average at this level, just here below 25. So right in the 25 range there in the 10-day moving average. I would want to see it get back above that to enter a new long position. So.
Thanks, Rob. Here's one we haven't looked at in a while. Let's look at SOFI, or SOFI rather, SOFI for Lisa.
You bringing in a little dead mouse reference there. um, so SoFi hanging right in at 15, had a nice run, really good consolidation occurring here at the 15 level. So I think if you're long this, you stay long as long as it stays above 15. If it breaks below that, then there's a chance it comes down to 12 and a half and tests that 50-day moving average. We are getting some separation between the 10 and 50-day moving average. So going through some sideways consolidation is the most ideal form right here without any further movement to the downside. Allow that 50-day moving average to catch up and move the gap down. For those of you that may not have heard before, I always talk about no security in any time frame gets too far away from the 10-day moving average. Well, the same thing occurs between the 10 and 50-day moving averages. They tend to run in similar movements. They don't separate too much. When they start to separate a lot, that's when you're starting to get another overbought signal. So you can see down here where they are together, we're moving up and they're kind of hanging in there. And then as we continue to go a little more vertical here, you started to see a little more separation between the 10 and the 50-day moving average. This also goes to the reason that I like a 45-degree angle move. I don't like it when things move at a higher degree than 45 degrees. So you move in this 45-degree angle, it allows that 10 and 50-day to stay a little bit more in symmetry there rather than the separation. So if we can hold 15, I think you're good here. If it breaks 15, you could be looking at 12 and a half.
Thanks, Rob. Got a few symbols here from John for you, so I'm just going to give you the first two. We will do a bit of an extended Q&A since we had a little bit of technical difficulty, but we still have the case study consideration to get to at the end of the session. First symbol from John is going to be Oxy, OXY.
Taking a look at oil. I didn't bring up oil earlier, but I will as we look here because the oil company stocks are all over the map. Schlumberger not performing. Some of the other ones are. Oxy coming down here, moving lower. Let's just flip over here real quickly to USO, and then I'll bring the Oxy chart back up. And you can see that we tried to break out of this big ascending triangle, or excuse me, big symmetrical triangle. And I've already talked about this so many times, but I do think that oil stays in a big, huge trading range for a while. I know that the new administration is very pro domestic production of oil, and that's going to create more supply. Most people would think that would move the price down. My viewpoint, and that's all it is my viewpoint, is it's highly likely that whatever extra production we have in the U.S., OPEC's going to cut production because they do want the prices to stay up. So even though we will break out of this triangle at some point, I think we stay in a big trading range, and I could be wrong, but let's go back to Oxy and take a look at that. Now we are in a wave 5 to the downside, and we're getting in the area of where you would expect that to end. So we had a wave 4 awfully close to the 38.2% level. So that would lead you to a wave 5 around 61%. So not too much lower than there. So I don't see an entry to go long right now. I think you need to wait, let that wave 5 be done, and the bounce to occur when a wave 5 completes. If the wave 5 doesn't go beyond 100%, then you retrace back to the previous 4. but we can't do that without being above the 10-day moving average either. So I don't know that there's enough to the downside to go short here. And I certainly wouldn't enter long until we were back above the 10-day moving average with a confirmation day. And then we have the 50-day moving average not far apart. So it still would be aggressive if we got above the 10-day moving average to go long. But if we could get above the 50, then I think you're pretty good to go back up there to the previous four. Is a bit odd that oil prices have stayed pretty darn steady at a slightly elevated pricing, and yet the oil companies en masse aren't performing better. So I understand why the question. So it is Warren Buffett's favorite of all the petroleum companies.
Yes, indeed. That's a good point there. Second symbol is going to be NNE.
NNE,
Correct.
nano nuclear energy. Don't think I've looked at this one before. Perhaps I was thinking that you were talking about NEE, which is an energy company. So let's see if no, not been around long enough to have an Elliott wave pattern. So just following the trend here, let's take a look at the DMI is um, weakening. So that's concern. Let's see what the CCI is doing. Um, Moving down below 100, getting towards negative 100, and it needs to break below that. You can see the way this new platform runs the CCI, which I think is really cool. 100 to negative 100 is kind of the range the CCI stays in. When you get above or below those, you're moving towards the potential to extreme points. That would be an extreme point high. That's an extreme point high. And so it labels it or shadows it when you're above either 100 or below negative 100. And so at this point, we could be heading down to break below negative 100 and have an extreme point low. I'd be pretty nervous about this right now. But the positive side of things is perhaps we hold this 50-day moving average just as we did back here at the beginning of November. So if we can hold it and start to bounce there, you could have a nice run there. I would have a hard time entering it today. I would want to see it turn and bounce off that 50-day moving average. Like I said, that may be all it is just another test because it's done it before. Broke up in September, came back down, tested the 50-day moving average, had that big run in the middle of October, came down and tested it. Another big run here in the middle of November. Is that all we're doing is testing the 50-day again? I think it's the prudent thing to do to wait and see if that is indeed what's happening, and then perhaps you can capture another run higher. But I wouldn't, for me personally, I wouldn't be able to do that today.
Very well. Thanks, Rob. Next up, we're going to go over to Lisa. Would like to see what's going on with KR.
Kroger. They've been fighting, the grocers have been fighting. Walmart's been taking tremendous amount of share. Dollar General tried it to put in a marketplace, and it didn't work very well for Dollar General. In fact, I think they're stopping that as one of the things that they're doing to try to create more value for investors there. But Kroger's dealing with it too. Walmart is where everybody's going to shop for groceries now, it seems. So we come back down to this area here around the 50-day moving average, but we do have a fairly high score. It's not at 75 or above, and sometimes these stocks take time to turn and move. We've learned that with the AI signal. Sometimes they move rapidly, rather quickly, and other times they take their time. And if you're an options trader, you can see a drawdown in the trade, but then if you have patience, it comes back up, hits the signal, and you end up with a winning trade. We've got tons of them on our website at evotrader.com that have done just that, just the patience for the patterns to play out. We love it when they move quick. We have lots of them that hit their targets in 1 to 3 days, but they don't all do that. So it's an unrealistic expectation to think that they all do. So right now, from the AI standpoint, you're just trade the 50-day moving average at the close yesterday. We opened there and have been trading up throughout the trading day today, but we are bumping our head on the 10-day moving average. If we can turn and move above the 10-day moving average, then high likelihood we run up and hit that AI target around 62 and a half. So if I was in this one right now, I wouldn't be concerned about it as far as continuing to the upside from here.
Thanks, Rob. Another one we haven't looked at in a bit from Angry Sushi. We'd like to look at Disney, DIS.
Yeah, we actually they were asked about that, and I featured Disney in the U.S. market update. So if you want more information on it, you can go check out the U.S. market update on the YouTube channel, LA Wave Options channel. So Disney had a nice run. They surprised everybody. I was talking about Iger is just done it again with Disney. He seems to be pretty amazing at turning that company around. Every time they're in trouble, they bring him back, and he seems to fix things rather quickly. I had mentioned that family members that were at Disney World a week or so ago, and it was incredibly crowded, they said. And then the streaming service, which has been part of the concern about Disney on how well they were doing because they struggled for a while on the streaming service is doing very well also. So Disney kind of hitting on all cylinders, and we had this big run up, and now we need to go through this consolidation. So the question only is how far down do we come down in the consolidation? You can see I've drawn a line there. There's a potential that it drifts back down towards 110. I don't like this gap. You know that it will get filled, highly likelihood someday, but it could be well into the future. But we traded below the 10-day and closed below it yesterday. We're following through with that a little bit today. I don't think this is anything other than backing and filling because the numbers have been good. It's just when you gap up like that and go vertically, you have to consolidate. That's just how things work. That's why I talk about these things in ad nauseum, because that's how things work. Nothing goes straight up forever. They just don't. But anyway, I think 110 is the level. If it broke that, I'd be concerned. Anything above 110, if I was long, I'd stay long. Disney, I mean, they had a really good earnings report.
All right. Thanks, Rob. I see we're getting close to time. Again, we did start a little late, so we'll pass through this last symbol and then go back over to you for the case study consideration. Let's look at MBLY for John.
NBLY. Huh.
Sorry, M as in Maverick.
Oh, MBLY. Somebody's asked about that before. Mobileye, it looks solid to me. That's a really well-formed five-wave pattern. You look at the wave 1 and 2, that's classic. The wave 3 looks good. And we're consolidating very nicely here. We are breaking below the 10-day moving average today, but we did Friday, and then got back above it yesterday. I think this is just really solid, normal consolidation here. Looking at the DMI, nothing too concerning there. Would like to see those two directional indicators actually turn and move back apart. So I'd keep an eye on that. As long as this stays above the 50-day moving average, I'd stay long here. I think this looks like a very solid pattern to move higher. If it breaks the 50-day moving average, I'd be out. So it's a pretty tight stop. So from a reward to risk standpoint, that this is the kind of thing that you want to enter to where if you're right, you do well. If you're wrong, you don't have a whole lot of risk because the 50-day moving average is right there. But just the setup on this looks really solid. So the CCI moving down a little bit, but that's to be expected with the consolidation. Once again, the only concern would be if that moved below -100. So the range, again, positive to -100. You break below that, that's where you start to get concerned on it showing strength or weakness. So we could just be coming down in an area where it's ready to turn and move back to the upside. So anyway, yeah, watch that 50-day moving average on this, but certainly it looks set up to me to go higher from here for sure.
Alrighty, you want to head over to the case study consideration for today, and then I'll show everyone how to post that.
Yep. What we're going to look at is symbol H, Hyatt Hotels. You can see it is in the AI portfolio and looking like it wants to go to 175. And that's going to be it.
Alrighty, very well. Well, simple enough. Let's go ahead and transition over to the platform. So I'll go ahead and take the screen here, and everyone should be able to see the platform view now. And is this going to be a trade idea, or are we looking for a post?
This is going to be an idea.
Right. Very well. So as we'll see here, this is a menu view, a jumping off point of everything that the platform has to offer. You can see our ever growing and evolving community here. We're going to
I
go over
think
to this light.
I'm still seeing you, Zach, so I don't let me see if
That's the Zoom update there, just in case everyone else is as well. I'll make sure I switched it there. It should be able to be switched by viewer, but it's a good safety check there just to make sure everyone can see it. So should be good there. I'll stop your screen share as well just to make sure. And
yeah,
now we should be good.
there we go. Yep, all good.
All right. So, as I was saying, this is a jumping off point of everything that this platform has to offer. As Rob mentioned, we have an ever growing community. And as you'll see throughout the ideas, which can be located up here by this light bulb symbol, you can come in and interact, which we greatly encourage, whether you agree or disagree, as Rob always says. And I've echoed that opposing opinions is what makes markets. If everyone agreed, there'd be no trade, there'd be no transaction to occur for an individual stock. So we welcome your opinion, whether you agree or disagree. You have the option to physically do that up here with the agree or disagree box. And then we would love to hear your context as to support your overall idea as to your opinion on that stock. And so for today, we're going to actually do an official idea. Again, I always just like to do a quick review between a post and an idea. A post is essentially a draft idea, meaning the criteria isn't fully met for a legitimate idea that we're going to be posting today. As you'll see, as we go in to post the idea, everything is going to be real time as if you were paper trading in this company with your brokerage. All of the data is going to be real time and exact as it would be if you had actual risk or capital on the line. And this one's going to be for symbol H. So we will look for Hyatt Hotels. We'll go with a title idea I just drafted up here. And then we will go to a target price of 175. Is that correct, Rob?
Yep, that's correct.
And the time frame we're looking for?
Um, let's just stay with the standard 3 months. Give plenty of time.
Very well. So as you can see, we have these fixed intervals of time for you to select. However, if you need something more specific, you can always come down here to this custom option and you can go to the very day you would like this trade to expire. But for this one, we're going to do a quarter. So 3 months there. And right after this session, you'll see that this will be made nice and pretty with lots of context supporting the idea that we are here posting. But as you can see now, it is officially posted. And as I mentioned in the beginning, we encourage you to go in and interact, whether you agree or disagree with the idea. Please provide some context to support your overall opinion on the stock. And I think other than that, we can probably let everyone get back to the markets. I know we went a little bit over time, so thanks for another insightful session, Rob, and I'll pass back over to you to wrap up.
Thanks, Zach. Appreciate it. Your duties in the back end. Appreciate it very much. And thanks to everybody for watching. We value your time greatly. We know how important it is, and we appreciate you spending some of your valuable time with us each and every week. I enjoy doing these during market hours. It's a lot of fun. So we'll see what happens. The next couple of days could move the market a little bit with those CPI and PPI reports, and we'll let you know how things play out in this weekend.